back, baby. Bitcoins, shitcoins, or NFTs. There's no greater feeling than hitting that sweet old time high, old time high, old time.
Hello. Good afternoon, everyone, and good morning, Zero Cool. How are you?
Good morning. Pretty good.
So, what I wanted to say, and I say this every week because I rewatch the stream. So, again, an eventful week. And you can just see it on the charts. If you look at the charts, you see up every week. It's like a roller coaster. We go up, we go down, we go up, we go down. And I think it's mostly because of the war we're currently in the East. And a lot of other things as well. So the thing I want to talk about today, and the reason why I think we dropped, is one, don't forget the war, because always when we see some rackets flowing and some bombs exploding, we see the price dropping, which is normal. But another thing which happened this week was this. So the Supreme Court allows now the US to sell their 69,000 Silk Road seized Bitcoins, which is a lot, because 69,000 Bitcoins at current prices, so at $63,000, is around $4.4 billion, which is a lot. I'm not saying they will sell everything in one go. I'm not even sure if they will sell it. But from now on, they are allowed to sell it from the Supreme Court. So this happened, it was the 8th, I think, 8th October. And if we just look at the charts, the 8th of October, we saw a massive drop. I don't think it's solely the reason, because like I said, there is a war going on. But this is a reason. 4.4 billion seized Bitcoins is a lot. It's a lot of Bitcoin.
Mm-hmm.
So yeah,
I think it was over a period until next year, October. It wasn't going to be like a continuous instant dump or something. Was it like a time period of a year that they could sell them, I believe?
But the thing is, we're not even sure if they're gonna sell them, because Trump said, yeah, we're never gonna sell them. We're gonna put them in our strategic reserve, in our treasury. But then it was funny because we saw this. So I saw this and I heard it as well. So in the Trump speech on the, where was it again? Nashville, something, Bitcoin conference in Nashville. He said, yeah, we're never going to sell the seized Bitcoin. We're going to put them in the treasury. And then 2 days later, the Biden administration moved the other coins that they seized from wallet to wallet. And you can track this very good on Arkham Intelligence. So they try to track every wallet that's from the US government. Mostly are with Coinbase Prime. That's their custodian. And so you can see if the wallets are moving or not. And I suggest that you track this very well, because if you see the wallets moving, maybe you should put an alert on it. I think the market will drop when the market thinks, okay, they're gonna sell these 69,000 Bitcoin. You got to be sure that we're gonna see a 10% drop.
Yeah, definitely. Same with the Satoshi wallets, right? We all hopefully presume they will never move, but
that's probably more than 10%.
I can tell you that there are multiple bots monitoring those wallets constantly, and the second you see a movement in one of those wallets, they will start to sell. It's all automated. But by the time you're figured out why people are selling, you already had like a 5 or 10% drop on Satoshi coins. Now, I'm not saying it's gonna happen. I hope it never happens. I doubt it ever happens.
There's probably already bots linked to it, like that.
There's been bot linked to it since the day his wallets got figured out properly. So these coins moving is indeed bearish, I guess.
I saw in the documentary, I don't know if you watched it, I'm halfway because my girlfriend fell asleep. But they said that apparently in 2013 or something, maybe it was earlier, that there was some sort of bug in the Bitcoin code, which made Satoshi's wallet visible. Because before that, nobody knew how much Satoshi mined, and it was 1 million Bitcoin. But before that, they didn't know it.
Interesting. I know they had to do a rollback at one time, like of the chain, but I didn't know about the bug of it. I haven't seen it yet. I'll probably watch it today, I think.
Yeah, I bought HBO for 1 month. I think it's pretty good. So I'm already halfway. It's pretty good. It's not only about Satoshi, so they give a background about Bitcoin as well. It's not bad. It's good. It's friendly for beginners. It's no FUD. It's clear information. It's yeah.
The betting itself around who was Satoshi in that documentary it's wild. It just shows you what crypto is. Like people gambling on who a documentary says Satoshi is.
Didn't you say to me like a couple of days before, yeah, we should bet on another one from this list, and so we should have made a lot of money? It was because he was not on the list of the polymarket.
No, he was, but
I was,
I
okay.
said that multiple/other was like good value because there's a good chance they wouldn't get who it is, right?
I already saw another good bet, but yeah, it's too late now, that there was a 10% chance that people would know who Satoshi is in Q4 this year. So if Satoshi's identity wasn't revealed this quarter, you could have made 10% on your money, which was basically free money. And it was just that high because people thought the documentary was going to provide more information.
Interesting.
But anyway, let's move on to our analysis. So this was the reason we dropped, in my opinion. So you can track it on the Arkham website. I hope these coins won't move, but you never know. Honestly, to end it here, I don't think they will move because I think there are a lot of single issue voters in the United States, and a lot of people want to vote pro crypto. And I think if the Harris administration does this, they will lose a lot of votes. I don't think they will gain votes because they sell it. So I only think they can lose from this. But that's my opinion.
Yeah, you're probably not wrong. They both push crypto, right? They both have it in their agenda.
You have to get the votes.
And Harris didn't have it on her agenda, and she clearly made efforts, or the campaign team made effort to make it an agenda point. So they probably won't touch it before the election.
All right, so moving on, the ETF inflows, nothing new, nothing surprising. So this week we saw a little uptick in the ETF inflows. I think you can see it here in the daily as well. So small uptick in the ETF inflows, so nothing out of the ordinary. So I'm not going to spend too much time on it. So let's move over to the CPI. So CPI, inflation worse than expected. So basically we saw the ETF uptick, which is not good for the economy. You can see it here. So this is the United States core CPI. And for the first time, well, not for the first time for the first time in a couple of years, we saw an uptick again. So since September 2022, we only saw inflation going down. But since this month, the data from this month, we went up by 10 basis points, which is not good for the economy because that means that we're in a rate cutting cycle with inflation already going up. So I don't know what.
That's harder.
Yeah, so I don't know what the government is going to do. I suspected this, so I think we're going to see higher than normal inflation this decade. But the problem is, so the US government needs to do something about this, or we're going to go into a recession with high inflation, and this will be awful for a lot of people. Another thing I wanted to show you where you can really track the inflation before the government, let's say, is Trueflation. I'm a really big fan of this website, and it tracks all the inflation with oracles. So with real prices from real things in the economy.
Yep.
And you already saw, just by following Trueflation, you knew inflation was going back up again. So basically those that followed the Trueflation app knew, well, you can never know it for sure, but there was going to be an uptick in inflation. Here in Trueflation is probably because the oil and energy prices went up. And it's a simple explanation because of the war. So because of the war, it's always the same. Oil is a good buy. So oil and energy prices go up. And this is the reason we saw this massive, 1% uptick in inflation. 0.5%.
It's pretty funny that the Trueflation website is actually more accurate than what the actual CPI is than what America is reporting. And it is pretty common that the markets, especially crypto, go risk off into a CPI print. I think if you chart out which each CPI print date, there's always a little sell-off into it, and that's just people saying, I'm not going to gamble and I'm just going to take a little profit. before it, and it was a bad print, and that really drove down the price. I think even more so than the Silk Road Bitcoin moving. I think it's mostly the CPI print that spooked a lot of people for a little while, because we're up higher already.
But and it's like weird to think about it. So if you're not familiar with how financial markets work, it's really hard to keep your head around it. So because you might ask, okay, Jack, I thought Bitcoin was an inflation hedge. So doesn't that mean that if we see higher inflation for a long time, isn't that good for Bitcoin? But the thing is, so yes, it is, and that's why we buy Bitcoin, to protect ourselves from the massive money printing of the United States dollar or from every fiat currency. But the thing is, and what we drive on is the interest rates. And basically, the thing is, if the inflation is going higher again, the Fed cannot cut their interest rates. And that's the thing, and you see it in the odds. So it's again higher than last week. So now we even see 10% that the Fed won't even cut next meeting. And that's the thing. So because we see inflation going up, the Fed won't cut their interest rates. And because the Fed don't cut their interest rates, that is not good for Bitcoin. And that's just a simple explanation why inflation uptick is not good in the short term. Obviously, in the long term, that's why we're into Bitcoin. That's why we buy gold. When there's a lot of inflation, these are the assets that you have to buy.
Yep, correct.
So yeah, 10% chance that there will be no change in next meeting, and 90% that we do. I think we will do it. So let's see the probabilities. This is much better. Let me zoom in a little bit. So 10%, but I think we're going to see a cut every meeting from now on, because you have to. Why? And we talked about this every week, because the United States dollar cannot not cut rates, because every country in the world is cutting their interest rates. So by number of central banks, 70% of central banks in the world are currently in their cutting cycle. And if the United States dollar does not do that, there will be a lot of there will be too much volatility between currencies, and that's not good. All the world leaders, all the central banks don't want currency volatility, because that's not good for the average person. So they try to keep their cutting cycles and their hike cycles together.
Aligned.
Yeah, aligned. That was the word I was looking for. So, and you can see it here. So these are the major central banks. So this is from yardini.com. Very good website, very trustworthy. So these are the most important central banks, and you see their rates going down. The only one that's not going down, and you can see it here, is the Bank of Japan. But we talked about this last week or 2 weeks ago.
They didn't hike.
They didn't hike.
COVID.
Exactly.
It's, if you like take a step back and look at it from over the years, it is pretty remarkable that they did not hike through COVID.
Yeah, they were fucked. They couldn't do it. Their economy is like almost in a, it's not going upwards already for 20 years or something.
It was spiraling, right? It was forced not to do it. But personally, I find it super interesting, right? Like, how do you get to a point where you can't even hike? Because if you hike, you're gonna burn harder and longer. But yeah, interesting. That's all.
No, and then just looking at the economic calendar, there is not too much going on this week. The only maybe important thing are the jobless claims. So just to see if we're entering a recession or not. If there are a lot of jobless claims, which is not good for the economy, and we will go into a recession, which then again would maybe prompt the Fed to cut more interest rates. So it's all aligned. It's not super easy. It's not because of that. It's like a lot of factors going on at the same time. So it's really hard to measure. But the trend is clear. Rates are going down. But like always, like every week, and I really want you guys to know this, the most important thing is global liquidity. Again, this is the global liquidity chart from Cross Border Capital. And again, this week, liquidity is rising. And also what I want to say about this is, so I follow a lot of other macro analysts, and a lot of other macro analysts said this week, global liquidity went down. A lot of reasons. One was that the DXY is going up, so the dollar index is going up, but they're not tracking liquidity how you should track global liquidity. They're leaving out factors. Why? Because most analysts are lazy and don't want to do the work, or just take the easy chart. So most analysts are just tracking global M2. which misses a part of global liquidity, which cross-border capital does in their global liquidity cycle, because they have all the data from everything, and that's how you have to track it. And it's because the shadow monetary base is growing. I think he even posted a picture of the shadow monetary base, and you can see this is going up, and this is the reason that this week over week, global liquidity rised again. So if you watch global liquidity, try to watch it from Michael Howell from Cross Border Capital, because the other resources are good, but not enough. So if you want to have the full picture, this is the full picture. Another topic
on global liquidity, right? You said 6 weeks,
well,
give or take.
At the moment, it's 6 weeks, but so I talked with Michael Howell 3 weeks ago because I interviewed him. The interview will go live, by the way, in a week and a half, something like that. Basically, what he said was, the longer Bitcoin exists, the closer the lag is. What I mean by that is because people know global liquidity is the best way to value Bitcoin. More and more people are watching global liquidity, which makes the lag smaller and smaller.
Yep, makes sense.
So in the beginning, it was like what did he say, 3 to 6 months or something, but now it's like 6 to 12 weeks. Yeah. And he said it will probably go even closer and closer and closer. So if you see this, you can just buy Bitcoin. This is the driver of Bitcoin. So this makes it a safe buy for me at the moment. And I'm saying this every week now. So I hope you guys understand it, that it's a good time to buy Bitcoin because global liquidity is rising. Not financial advice, but that's what I'm doing. And I think that's what Zero Cool is doing as well.
Absolutely.
So next to Bitcoin, an important one to follow is gold, because as we know, Bitcoin is kind of the same as gold. It's like the digital gold or exponential gold or whatever you want to name it. And I saw a very good video from Felix Zulauf. So Felix Zulauf is a hedge fund manager. He manages like more than $1 billion. You can find him on YouTube. So every couple of weeks he gives like, how can I say it, a presentation to his investors, and sometimes we get snippets from his presentation on his YouTube. So for example, here we can see 1 minute. So just check it out. It's only 1 minute of your time. And he showed the charts of gold versus the S&P. So basically the red line is the S&P divided by the gold price, and he puts a 7-year MA on it. So a 7-year moving average. And so basically what he says is every time we get a cross, so when the S&P divided by the gold price crosses, or let's say crosses down the moving average, then we will see a bad period for stocks and a good period for gold. So, and at the moment, we're just on the verge of it crossing again, which means that right now, should be a good time, should be a better time, if you look at this chart from 1930, based on history, to buy gold instead of stocks.
Which is interesting, because I found a chart this week that says every time gold has stopped and starts to go down, crypto starts to pump, or Bitcoin starts to go up. If you want to swap to my screen quickly, I think I got it open.
Okay. Yeah.
That's from Saint Pump. And so these 3 markings is the Bitcoin price, and then behind in the red is the gold price. And every time gold starts to trend down, like has stopped and starts to trend down, Bitcoin starts to make his hyperbolic move up.
I think that's just because of the lag. So according to Charles Edwards, Bitcoin lags gold by about 3 to 6 months. So I think it's just when gold moves up, Bitcoin moves up 3 to 6 months later. I don't think it's because gold goes down, Bitcoin goes up. I just think it's because of the lag.
Yeah, well, there's an argument there. I just found this super interesting. You said gold's going to go up and the stocks are going to level out and then sideways drop.
I didn't say I didn't say stocks are going to go down, because, well, so a lot of people think we're going into a recession, and that's where I want to talk about it as well. So a lot of people think we're going to head into a recession. The reason I don't think that's the case is because of the global liquidity.
Okay.
So global liquidity. So normally, if we just looked at the interest rates and the inflation, so we see inflation is coming back up. So the government will be in a bad spot. But now, since 2008, the government has a lot of tools to not enter a recession, like, for example, quantitative easing. And I think they will just do the same thing. They will just, so we will have inflation. We will have massive money printing because the government will have to do that, or we will enter a recession. That's why I think gold and Bitcoin will perform extremely well because of all the liquidity that's entering. Stocks will do good as well, but I think Bitcoin and gold will do better. But the thing you have to watch out for is when the liquidity cycle tops, I think the music stops. And I think then we're going to enter a very, very bad recession. And I think that will start late 2025. So if you're into meme coins, make sure you're out of it at the end of 2025 because they will go all to zero.
Yeah, I think there will be a brief period where all hell breaks loose and we see massive 10-20% candles down on the majors, and then if it's 20% down on Bitcoin, it's 50% down on your memes, right? So I don't think it's going to be soon, but probably it's for me it's hard to say how it's going to be the end of 2025. There can always be like some black swan event that triggers the start of this doom, and but I agree, it will be bad if stuff starts to crumble and we start the actual recession.
Yeah. So the late 2025 is just based on the global liquidity cycle from Michael Howell. And I asked him as well, do you think maybe this year this cycle will go on longer because of the Fed maybe will print more money? And he said, of course, that's a possibility. You never know. So we will see when we get there. Maybe it's going to go longer because the Fed prints massive amounts of money. But yeah, then Bitcoin will pump even more and gold will pump even more. And I even think as well, so let's say we enter a recession, gold will perform better than equities, but will also drop a lot because it will be a liquid asset. So yeah, just watch out. Try to educate yourself because a recession is coming. Not this year, I think. So just watch out. So that's the macro part. I think it's very clear for everyone. So the next thing I want to talk about is the mining costs. So this is a chart that I showed you guys last week, and it went even higher as well. So now on average, according to Micro, it costs $78,000 to buy a Bitcoin. Currently, a Bitcoin is $62,000.
Mine a Bitcoin, yeah. Mm-hmm.
What I always said previous weeks is, this is a good website, it can be trusted, but they don't know the price of the electricity of the miners. So that's why I searched and I found a very good research report, and I'm going to show it here with you guys. So this is from Bitwise. And what they did was they researched all the publicly traded Bitcoin miners, and because they're publicly traded, they have to give all their information. And you can just look for their average price that they mine a Bitcoin. So you see the energy and hosting costs and the hardware costs. And on average, all the publicly mining companies together have an average Bitcoin price of $61,000, which is surprisingly, well, not surprisingly, the same price as a Bitcoin. And so just based on that, you can see that's a very good valuation method. If you can know at what price the miners are mining Bitcoin, this is the support. Normally, the price will not go under it. If it goes under it, we know the miners are not going to sell, so there won't be natural selling pressure. So yeah, so for me, 61K is a very good support for Bitcoin. We're above it, so I think everything under it, very, very good buy. Next up is the seasonality. So every week we laugh about seasonality, but well, Tioku laughs about seasonality, but I try to back it by some claims. So last week I backed it by what's his name again? Timothy. and he wrote a research report about Metcalfe's law based on the seasonality. This week, what I want to show you guys is just how Bitcoin prices performed during Q4. So every quarter, Bitcoin didn't rise more than 75%. But based on historic bull runs in Q4, we see Bitcoin pumping 200% in a quarter. And I think this is a possibility for this Q4. This Q4 or next Q4. But I think this Q4 has a good opportunity to, well, not maybe 200%, but at least 75%, because I really think this quarter will be a good quarter for Bitcoin. What do you think?
No, I think we'll see, another all-time high before the end of the year, right? It's almost inevitable, bar some more war news, but
it will be elections, war news, and the third one is if the US government coins will move or not. I think these three are the most important indicators. Well, no, the most important one is global liquidity, but we know that's trending upwards, so that's not an unknown anymore. All right, next up.
I think we need to wait.
Sorry.
I think we need to wait for the word quantitative easing. They start using that word in press conferences.
I think their name-giving department will think of another name. It will be the same. It will be quantitative easing, but disguised under another name, so the people won't freak out.
Yeah, you're right. They'll probably never utter the words quantitative easing anymore.
Yeah.
I think they tainted that word a little bit.
All right. So next up are, like I said, third important thing, the elections. The good thing for Bitcoin, so let's not talk politically on the stream, but the good thing for Bitcoin is that Trump is ahead according to the betting markets. Why is this good? Because I tweeted about this another time. So we can just see if the Trump odds of winning move higher, we see the S&P going higher. And we know Bitcoin and S&P are kind of correlated. And I think even Bitcoin will pump higher because Trump is more pro-crypto than Harris. So I think there is some merit to it to say that on the short term, not on the long term, in the short term, if Trump wins, will be better for Bitcoin. And at the moment, he's ahead according to the betting markets, but who knows? And that's it for me. So I hope everyone understood the whole thing. And yes, you're cool. It's up to you for the trading analysis.
You're never gonna guess. We're still in range. It's tickling away at everybody's sanity, right? We've drawn this line, or maybe a little bit lower, this line, like since we started back in September. Conventionally, we started streaming here, and our target was here, so we're on our way. I think it's this chart here that we have up. I think this was our first doodle back in September after we took a little hiatus, and yeah, 70,000 still the plan short term, I think. The other plan that I had back then is like if it gets here and it starts stalling, you can scale in a swing short. I'm just gonna delete this. This will never happen, I think. The reason why I don't think this will happen, I really thought we were gonna go super fast up and then consolidate. Instead, what we've done, we've dropped, we've back tested it, and we've reclaimed this this area here, right? So still bullish, but we're still in range. But let's talk about what happens over the course of that drop, right? Once we broke 60K here, 60K here, you could just see people doom posting, it's all over. We cleared those lows here. And then we had a good little bounce. And then, yeah, you had two options when you were here, right? You either believed that we're still in a bull market and it's just a liquidity run to these lows, or it's a market structure break and we're gonna tumble over and go to low 50s and even 40s. Now, the reason why I'm super bullish, I'm still saying and seeing 70K is this recovery here is remarkable, right? This is a V recovery and then some. You don't see that often. V recoveries. We're conditioned because we're going sideways so long. The market conditions you to think one way. If you see something happen over and over for months on end, you're not going to expect it to do something else. This is a very strong recovery. This indicates for me there's appetite for higher. But where to enter, right? If you missed this leg, if you sidelined into CPI and you were like, okay, I'm gonna sit this out. We'll see what the market says. Let's go to 15 minutes. I think I posted this last night when I went to bed when we were over here, I think somewhere. I'm bidding 61.6 to 61. I think this is where I'm bidding. Now, in a trending market that's really super bullish, you won't get pullbacks. If you have like support resistance and you get above a support resistance line, you expect to make it back and go up again, and you're like, this is where I bid, right? If I see strength here, you could enter, for example, here with your stop here. Now, on a really trending bull market, which I think we just kicked off with this super V recovery, you don't get these retests. This is the obvious area to buy. Bitcoin will never give you this entry. If it's really bullish, it's just going to go to this. Maybe a little like this, but up here, never retesting the obvious areas.
And it's funny, can I show something real quick?
Yeah.
So if there's a good tweet, you guys know it, I will share it to you guys. And Stoic, he always puts out some nice charts. This is one that he puts out yesterday.
Good,
and it, funnily enough, he says as well, if we can make this 161,250 support, that will be a perfect buy opportunity for Bitcoin, and it's exactly the same level that you showed. So, which is why I thought it was interesting.
Yeah, 61.6, 61.7 down to 61,000. I like to use like a little spread in my entries and not just a single line. Because like Salsa Pepper said, or one of his quotes is that you need to have lucky entries and likely exits. It's better to have some luck with your entries than with your exit.
I think as well,
that's why I spread my entries with.
It's because of it's above the volume profile. Maybe that's. I don't think it's gonna go through it. Yeah. I don't know. Let's see.
There's just actors coinciding. But I was saying, in a super trending bullish market, you're never gonna get your entries. This is Bitcoin. If we quickly go to Popcat, for example. It does this, right? It never does this. You don't get your retests and your good entries.
Because everyone wants to buy there.
Correct. Doesn't mean you shouldn't bid there. It means it is in a really bullish market that's trending upwards. It's less likely. And that's how you get sidelined, honestly. If you say, I want to buy 61,000, I'm going to bid here. There's a good possibility it doesn't go there. I bid there. You should bid there. You shouldn't ape in here and hoping, it's going to go up. It's all about managing your risk reward. And you have a better risk reward if you bid here than if you ape in here. But it is weekends. There's less volume. Less volume means more volatility, because if somebody panics and market sells 1,000 Bitcoin, you'll get that wick. But that's what you want, right? You want that lucky entry, like we talked about 2 minutes earlier. So yeah, that's where I'm bidding. It is weekend. I think Monday will show its hands to where we're gonna go.
Monday it's closed, I think, in the US, the stock market.
Yeah, it's correct. It's a holiday. So yeah, this is a long weekend. It's a very good, I think longer weekends is a good way to, not a good way. It's a time period where you can manipulate the market easier because the boomers are asleep on Monday. TradFi isn't trading. It's for me. It's super hard to tell you where to enter. You can if you're still sidelined. I know we've been talking about last 2 streams that you should get some exposure. It's time to get some exposure. Even spot. Your invalidation is super easy, right? If we start trading below here, not good. Got it, and start looking for shorts. But for now, I would slowly start to enter with Bitcoin. We've seen Bitcoin had a good bounce, but alts and especially meme coins, they're leading the charge. They're doing 10-15% a day. They're going hyperbolic. That's where you need to be if you want to make money, I guess, in crypto right now. It's a meme cycle at the moment.
Yep.
But we're looking at Bitcoin. I would say start scaling in if you haven't already. And ideal entry 61.6 to 60.
I think so as well.
With your invalidation below 59,000. And where are we going?
To the moon.
Yeah, to the moon. 69.5 to 72,000. It's like a pretty obvious first target, but the longer we hop around, the higher it's gonna go. Same on the other way. Say we start breaking down, it's gonna go lower for longer than what you are willing to hear. I think it's a quote from Kobe, who says that you're less likely to, you're more likely to exit too early, and you're more likely to cut too late if you're in a losing position. So yeah, let it run. After this, 84,000 I think is a nice number, and then we're easily into 100, and then 135 is another one I have somewhere on the chart.
I think 88k is the Fibonacci, I think, from the range or something. Not sure.
This is where you're happy, this is where you're very happy, and this is where you're euphoric, and when you're euphoric you should sell. And this will, of course, this is not to time scales, it's just to the price range. If this happens to be Q4 of next year, where Jack told you I should probably exit all markets, this is where you exit all markets. But
we will be with you guys along the way. I will make as well a spreadsheet about all the exit signals, when to exit, why to exit, and we will get there. For the moment, it's not the time. I think it will be in a year. But we will be with you guys. You know that. So every week we will say our opinion, and if it's time to exit, it's time to exit.
Yeah, this is dreaming stuff. This is realistic. We'll do step by step, right? If we get here, we'll see where we're gonna go. And if we start breaking out like this, then we can start talking about this. But yeah, I think the most important thing that people really need to understand is this has been mentally breaking a lot of people.
Yeah.
And until here, I would say, me not included, from here on, I'm included. It's good price action, but it's starting to work on my nerves and my mental as well. And I'm 100% sure I'm not the only one. I think as the majority of people doing crypto, this is very painful. And you have two options: you sit it out or you try to trade it. And I think most people are still trying to trade it, and they'll probably get, like, if like every little liquidity run here hasn't killed your portfolio yet, that's what the market is doing, right? So you have price capitulation or time capitulation. Price capitulation is where you have a very big wick, upside or downside, or time capitulation where we're doing this.
But the thing is, in the most boring periods in crypto, we saw that every bull run is a time to buy meme coins, because people, when it's boring, they gamble.
Yep, it's time to allocate to not only Bitcoin but also to altcoins, right? Build your base for the next year, I would say.
Okay.
That's everything for me for Bitcoin. It's been sideways, killing your sanity, and once it breaks out and it starts running, and I think we can safely say above all-time high. Say we break all-time high, 74,000. This is where you get excited and strap yourself in for a moon mission.
All right. So another thing we want to talk about this week is, so because sometimes I get messages from viewers and they suggested some things. So first of all, they suggested a Discord server where me and Zero Cool could talk with some viewers, where it's more interactive, where we can give our altcoin picks, and so on and so on. So what we're gonna do is me and Zero Cool are gonna have a meeting after this stream to set up a Discord server, and hopefully by the end of next week, so by next stream, we will have it set up with all the channels and everything. And then we would gladly welcome you guys into our Discord server and interact with you guys. Another suggestion we got from a viewer, well, a couple of viewers, was that they want to know our altcoin picks. At the moment, we didn't prepare too much for this stream, but one thing we noticed this week was that the base ecosystem is booming. So I wanted to talk about this a little bit. So this is Grow the Pie, a very good website where you can track all the layer 2s from Ethereum. The three the three most popular chains and most used chains on Ethereum are Base, Arbitrum, and OP. If you guys want to know a little bit more about Arbitrum or Optimism, I made a very good video on my YouTube channel. It's the first video I ever made. I analyzed both of them. The result was that Arbitrum was a bit more in favor to rise in value. But if we just look, so I made the video I think in March, but if we look at it right now, just look at the Base chain. So these are the active addresses. Look, the lead, Base is taking over the other chains. You can see it in everything. Transaction count, look, boom, just up only for the Base chain. What else can we check? Throughput. Another important thing is, and for me, this is one that gives value to a chain, the more stable coins that are locked up on the chain. And for that, Arbitrum is still a bit more stable coins on the chain. But that's fine. But look at the active addresses, the transaction counts. Another thing I wanted to show, what was it? Here, the rent or the on-chain profits. So the on-chain profits, that's a good metric to know if the protocol is profitable. So this is the only thing in crypto that you can value based on like stocks, like a PE ratio. So this is the on-chain profit the layer 2 has. So the profit the layer 2 makes a year or a month or whatever. And you see Base is the most profitable chain, the most profitable L2 chain on Ethereum. Mm-hmm. So we think it's a good time to buy things on Base. So because Base has no token, you have to look for tokens that are on the Base chain. One thing that we are in like a long time from the beginning is a meme coin on Base. So I don't want to promote meme coins at all, but just to get exposure to the Base chain, I think this one is a very good coin. It's out till August 2023. Me and Zero Cool bought it the first week. Unfortunately, I sold it a bit later for some profits. I'm not a big meme coin holder. I think I look at the charts every couple of minutes if I buy a meme coin. But again, I bought a bit later back in, like here, let's say. So I'm still a bit up in profit because I think it's a good coin on Base. Well, a good coin, it's just a meme coin, but I think it's a good. How can I say it?
Has a good community. It's active. It's still active. They have NFTs. It is in second NFT run yesterday. Super active community. And like Jack said, Base does not have a native token like Ethereum has ETH. So it's super hard to get exposure to the ecosystem. Mm-hmm. This is a day one meme coin that's been around. Super good community.
It's not a scam. It's very decentralized. The team doesn't have tokens. They don't buy a cult or influencer to promote it. It's just organic.
They also have a very big war chest with Ethereum in it. I think they have like over 5 million in active, like a war chest to spend on promoting. So there's a good back end as well. It has runway to keep this going. And yeah, I've bought day one and I still have those coins. So I think I bought a little more here and there. This isn't a retirement trade, but it sure is one that could print, because again, it's still under 100 million market cap if you look at Popcat and the likewise and WIF and stuff. They're all billions, right? So this can go times 10 and still be low on the market cap for memes.
The thing you have to keep in mind is, okay, we think we're gonna see a bull run in 2025. Just historically, looking at the previous bull run, 2017-18, 2020, where does the retail buyers come from?
All meme coin money.
No. Coinbase. So every retail buyer will be on Coinbase, will make a Coinbase account, will put their money in Coinbase. Where will the money flow to? If they want to get more degen, the base chain. Since there is no base chain token, since there is not a lot of projects developing on base yet, since we know retail loves meme coins, it will go towards base meme coins. So that's why I put a small allocation of my portfolio into it. Really, this is really not financial advice. Really don't put more in that you cannot lose, because this can go to zero as well. But yeah, that's just something I wanted to show to you guys today. Normally next week we will prepare a more, how can I say it, fundamentally better, more serious coin. But today we wanted to talk about the base ecosystem, because we think base is gaining more and more traction. And we think it's a good idea to buy some base coins. Yep. I think, Zirko, you're talking about every day about another base coin of yours that you're really interested about. Can you maybe tell me something about that?
Aerodrome, basically, I'll pull it up here. It's basically the Uniswap of base. This is where all the money goes through. It's the liquidity provider on base chain. If you look at the metrics, they're just all pointing up. Let me see. There's one here. There we go. This is their overall swap fees that they get. This is their all volume. It is just rising up. You can see from the start till halfway through the project, it's been pretty flat and then exponentially rising.
And they have a token, right?
Yeah, they have a token. I'll quickly pull up the chart here.
Oh, yeah, you have the chart. Okay.
Okay.
And these the fully diluted valuation is 1.6 billion already. It's not a small token.
No, definitely not. But then again, if you look at stuff like Uniswap, that's 10 to 50x that, right?
Yeah.
Not 50x, but 10x at least. If you remember our streams from the very, very start, I think I drew something. The type of token you want to buy for long-term holding and for like a bull run is the one that has a big peak, makes a base, and then starts trending up, which is up, makes a base, and starts trending up. So the structure for me is there to buy this.
I see even on Coinbase, I see.
Yeah, this I think is the next big one on base. Because the reason why I'm in this as well, besides the meme coins, it is super hard to get the exposure to this ecosystem.
Mm-hmm.
There isn't a base token.
Yeah.
Will
never be one, I think.
And I don't think there'll ever be one. So you need to have projects that draw in users, that has users, and Aerodrome is a deep project, I think, that has all the metrics that we're talking about. And there's upside to this, I think. How much? Well, very good question. Don't know, but there is upside to this.
You can just calculate it based on what the valuation of Uniswap is, and then just check what multiplier it can do, for example.
You can tell this is just coiling up, ready to make the next move, I think. And with alts popping off, it wouldn't surprise me this goes very soon for like another 40x, 40%. But yeah, we're 40%. 40% seems a lot, but you need to look at this on a monthly time frame, right? You need to be. There's a big difference between investing in something and for a longer term. We're talking about Q4 of next year, and doing a 40% trade intraday, right? We're looking at prices up here for talking about 12 months, and not a 40% little tick that you don't see here. Oh yeah, these are not price targets. I'm just saying this is where it's gonna go if everything starts popping off. I think that's it for our altcoin allocation besides Bitcoin, Ethereum, and Solana, which are the big three, which you should have allocation in, even if you don't believe in it. Ethereum has been a pain. I will get there. It will have its glorious candle where it pumps like 60% in a day or something.
Let's do the predictions.
Yeah.
Oh, it's the first time in a long time I've won. My line was lower than yours. So I said 64,000. You said 66,000. I'm the closest. So 6-3 at the moment.
I didn't expect the drop here, to be honest.
It's a black swan drop. Like I said, it's mostly because of the Supreme Court and the war. So you cannot. Well, you can CPI, predict the war a little bit, but you can never know when they're gonna throw a bomb. I don't know if this was a black swan or not. Probably some people knew about it. If you follow it closely, we should have known it.
Black swan is a big word. I think black swan. We had COVID was a black swan, and crypto we had 40% drop in day. This was like a 3, 4, 5% drop, which again, because we've been going sideways for 6, 7 months, everybody's asleep at the wheel. A 3-4% move is on an average normal time and day not that big. Here it was like, oh my god, my portfolio got wrecked. What am I gonna do? Type of drop, and then it feels like a black swan. It isn't.
So yeah, I think I'm gonna just follow my squiggly because my reasoning behind it was sound. So I didn't expect this drop. So I think we were just gonna range. This was because of the first war. So I think we're gonna go up this week, like I said. So time-based. This was basically time-based, not really price-based. So just time-based. I think we're gonna go up this week to go down the 2 following weeks because of the election fear, and the market doesn't like uncertainty. And I think we're gonna drop a couple of weeks before the election. But I think we're gonna go up now. So let me see. I think just percentage-wise, maybe. I'm gonna put mine where yours is. I'm gonna put it at 66. I think we're gonna go to 66. This.
I'll move mine like up to 68,000 then.
Oof. Super bullish.
Up. 68, higher. Let's go. Yeah. Pump it.
What is it? It's the 19th. Maybe a little bit, yeah. We'll see. Okay. Let me see how much percent that is, you think? You think 8%? Okay. I think 4%. Yeah, that's about right. Everything can happen.
Yeah, this is originally where I was targeting when we were in September, right? So like 68 to 69,000. My original target. And yeah, that's where I'm gonna keep it there.
All right, let's go. Let's end the stream. Guys, I just wanted to finish with something because every week we have more and more viewers. We see it on YouTube, and on X. So every week our videos of the live stream have more views. So I wanted to say thank you everyone who's watching. It really helps a lot, and I'm glad everyone is enjoying it. Just there was a little problem today, but I don't think anyone noticed. I couldn't see the chat. There was a little problem with my streaming application, so I couldn't see the chat. So I'm sorry if someone put something in the chat and I didn't respond. But like always,
put it in the comments.
Yeah, put it in the comments, please. Because also when you put it in the comments, our stream will be more trending, and the algorithm will promote it to other people, which is nice. So please like, please comment. If you had a question in chat, sorry that I didn't see it, but you can always message me as well on X, for example. You can message Zero Cool. His Twitter handle is under his camera
name.
So just thank you very much, everyone. And yeah, we see each other next week.